Hello everyone, welcome to Search for Yields, fortnightly newsletter from INR Bonds. I'm Nikhil. In today's topic, I'll be discussing with you about how higher coupon bonds can help the investors. By investing into higher coupon bonds, there are several factors where investors can take benefits from. If you're wondering where you can search for higher coupon bonds, the best platform for you is INR Bonds, online bond platform, where you can access the bonds through the web and also you can go through the App Store or Play Store, search for QuickInvest. You can download the app and access our curated list of bonds, which are curated according to the market dynamics. And you can use our filters to filter out the coupon rates or the yields as per your choice. And you can also have access to the IPO primary debt IPOs as well. And if you're a financial advisor, check out our partner portal where you can place bids and offers on behalf of your clients. Also access our curated list of bonds and as well as credit notes to help to grow your own assets under advisory. Coming back to the topic, by higher coupon bonds means the bonds which are offering the yields of over and above 10% or 9.5%. These bonds are generally high yielding bonds and have a credit rating of below AA or AA minus or A or A plus. So lower the credit rating category, higher the inflation, higher the yield where investors will get compensated by taking the higher risk. And also investors can also have access to the credit notes from INR bonds to understand what the issuer does. And also we have a internal risk score where it can help you to take detailed analysis on the choice of whether this investor, whether issuer can fit in your risk appetite or not. However, check out before investing, check out with your financial advisor as the bond markets carry credit risk, liquidity risk, and as well as interest rate risks. Coming back to the topic, higher coupon bonds. Let's say we'll take a bond which is having a coupon of 12%, another bond which is offering a coupon of 8%. The 12% coupon bond on an annual basis, it pays a monthly coupon of 1%, that totaling to 12%. On the other hand, 8% coupon bond will pay close to 7.2% types for a whole year, where you will get a per month of 0.72% types. Here, if you reinvest the every money which you get by investing into a 12% bond, the kind of reinvestment will have a compounding of higher rate. So every money you get in the form of a cash flow, the coupon, you can reinvest at a higher coupon rate, which will have a next month of additional income coming in for the previous month of extra investment. And again, you will invest the same coupon of extra coupon into the in the same month for the higher rate. In the same way, if you see the difference between a 12% and 8%, the difference is 4%. But however, let's say if you invest in a 6-year bond, the absolute returns can have a huge impact. In the later slide, I'll explain what is the difference if you invest in, let's say today at 12% and 8% bond, and what are the kind of returns investors can see. And also on the duration front, let me just quickly, briefly explain you what the duration is. The maturity and the duration are two different things. Maturity is the date at which the bond is expected to the principal is paid back to you, and the issuer or the borrower will pay you back the entire principal and including all the cash flows for the period. In the if you see the duration is how it's a weighted average of present value of cash flows, how quick you are getting your money back in a short period. Let's say a 6-year maturity bond will not have a duration of 6. Okay, since the maturity is 6 year doesn't mean that the duration is 6. For a 12% coupon bond and for 8% coupon bond, you see the 12% coupon bond will have a lower duration and the 8% coupon bond will have a higher duration. In 12% coupon bond, if you see in the first 4 years, you're almost 50% of your capital is you'll get back in the form of coupon payments. And whereas for in 4 years, if you see only 30% of your capital is you'll get back in 8% coupon bond. That's a very wide gap. That's the reason why the higher coupon rates will have a lower duration, and lower coupon rates will have a higher duration. It's an inversely proportional relationship between the duration and the coupon rate. And the capital preservation. By the mean, the capital preservation means as and when you get your money back, you tend to reinvest back the money into the same yield, and you're able to lock there is no reinvestment risk, and you are able to lock the same coupon and the yield for your investment, and you are compounding your money by preserving the capital and as well as the whatever the cash flows you're getting. So at the end of 6 years for a 12% coupon bond, you will almost be doubling your money. So the capital preservation will work tremendously if the coupon rate is higher. And obviously, I don't have to explain much of the inflation beating returns. So, where if you see a AAA PSU bond is offering the 7.5 to 8%, and currently the inflation is of 7.4%. So, barely the investors are making inflation beating returns. In the high coupon or a high yield bond, where you will have a very wider spread of alpha, you will be making 4% to 5% of extra alpha compared to any lower coupon rated bonds. And coming to the better performance than traditional fixed income instruments like FDs or the short-term mutual funds, where they're currently offering between 7 to 8% kind of a yield. Here, investors can make almost 50% higher than what they would be making in a traditional fixed income instrument. However, one has to compare all the instruments as per the precise risk rating appetite of yourself, and that would be an accurate comparison. Let's talk about the numbers for the examples which we have taken. As we already spoke about the duration and the compounding rate, where for a duration of a higher coupon bond is lower, and for a lower coupon bond it's higher. The compounding rate will be obviously higher coupon bond will have a higher compounding rate, and the lower coupon bond will have lower compounding rate. And the interest rate sensitivity, I'll not dive further much into and confuse you with that, but I'll just tell you briefly that the higher coupon bond generally they have a lower sensitivity to the change in interest rates, and compared to a lower coupon bond, it will have a higher sensitivity to the interest rate. That means any percentage change in interest rates will have a huge impact on the price. So that's what the interest rate sensitivity with comparison with the duration or the higher the rate of coupon. So coming to the absolute returns, as I said, let's say we invested at 1 crore in 8% and 1 crore in 12% bond, or 10 lakhs or 1 lakh, as whatever you call it. It's the hypothetical example we have taken. And as and when you get your cash flows, we have taken a monthly cash flow bonds, and you reinvest the same amount back into the bond at the same yield and the same coupon rate. Obviously, coupon rate won't change, and locking in till the time the bond matures. In this case, we have taken almost 72 monthly reinvestments, and as well as the 6 year maturity. And the absolute return is the money invested in a 12% coupon bond will have doubling your money. That is, you'll be generating a 104% of absolute returns. We saw 1 crore turning to be more than 2 crores, and in the 8%, obviously you saw due to the lower coupon rate, the total absolute returns are 59%. The difference between this both is quite wider. Even though if you see on an annual basis, you're making only 4% difference, but due to the compounding, at the end of 6 years, the gap is much wider. So it is almost a 40% kind of the return variance between both 8% and 12%. To understand more about what bonds available in the higher coupon rate, you can check out the QuickInvest app, or you can contact us. Our team is more than happy to help you with all your requirements. And to understand the risks of investing in the bond market before you invest into any of the bonds. Thank you for listening in. Do subscribe to our YouTube channel if you're not done so already, and get our timely updates about the market and as well as the podcast. Thank you.